What's changed dramatically for the developed world over the last 3 to 6 months?
So actually, behind this overall downward revision of our growth forecast for developing Asia, there are three elements. Number one is overall global economy and trade has been tilted downwards. So this is a broader element. And secondly, re-escalation we have seen trade tension between US and China. That's the number two element. And thirdly, more importantly, we see global electronics production and also especially semiconductor production cycle is now tilted downwards. So that is affecting relatively high-end producer in East Asia and Southeast Asian economies. So overall, considering these three elements, now we downward revised our growth forecast this year.
For the rest of Asia, in particular, we're looking at China. Mrs. Sawada, China, you've cut your growth projection to 6.2% from 6.3%. We heard from PBOC Governor just yesterday that he's pretty much confident that the PBOC has ample room in both fiscal and monetary policy to address the headwinds. Do you agree with what was said by the PBOC?
Yes, absolutely. China has still ample room for intervene or take some measures to handle external headwinds. But at the same time, I'd like to emphasize that Chinese government authorities now really setting a top priority of heading off financial potential risks and trying to control shadow banking and also local government bonds looming. So I think this is number one top priority. And having this, setting and slowing down slightly economic growth, but still, more than 6% growth, that's really a great achievement. And if 12 years continue 6% growth, Chinese economy can double. So I think still China is one of the fastest growing economy in the region and around the globe.
Sawada-san, I want to just have a look at the Chinese economy in a bit more detail. You just mentioned what was happening and the tools that the PBOC does have in its kit, as it were. Now, we're heading, according to Bloomberg, our Bloomberg GDP tracker, just bring it up here, for the weakest growth, actually, in 2019 in the third quarter, below 6% here. The thing is that this has implications, not just for China, but for Asia as a whole. Tell us about the linkages and how the rest of the region suffers when China catches a bit of a cold.
So as you pointed, slowing down trend of Chinese economy right now is partly driven by ongoing China-US trade tension, and that can have some spillover effect to Asian economy. And actually, direct impact on Chinese economy and indirect impact through supply chain within China and across border to other Asian economy, that's a largely negative impact. However, at the same time, Chinese export to the U.S. will slowing down because of the trade measures imposed by U.S. government. That slowing down can be replaced or captured by other Asian economies. So I think there is a positive element through trade redirection from China to other Asian economies. And we see this strong redirection effect already happening in countries such as Vietnam, Thailand, and Malaysia. So I think there are both negative and positive side, and so far overall impact seems to be positive.
Okay, this also has its limits, does it not? I'm going to bring up another Bloomberg chart here from the Bloomberg economics team showing how the growth tracker there is currently hovering just about 2.2% for worldwide expansion. We could be seeing we're poised to slow to a 10-year low, and that's being signified here by this GDP tracker. Now, tell me that, so what's going on in China is, of course, affecting the world, what's happening with this trade spat. Now, how do you advise the different countries in the region what to do here? There's a big push for fiscal stimulus. I suppose which ones need it, which ones don't? Who do you advise to do that, and who do you say, well, you don't need to?
So actually, a Chinese growth slowdown and overall Asian economic slowdown, it's a part of a medium-term and long-term trend. Now China became middle income and now moving towards the high-income countries, and other Asian countries follow the suits. And for a country which achieve development successfully and reaching a middle income, high income, it's natural to see growth rate slow down. I think issue is how to soften the negative short-term turbulence of economy. So in that sense, I think governments and also monetary authorities across Asia has been cautiously optimistic and handling external headwinds quite well. And for example, number of Asian countries, central banks adjusted policy rates after seeing this U.S. Fed interest rate lowering. So I think this fine-tuning of policy response has been carefully done so far, and I believe government and authority can handle economic management quite well. And so in that sense, I don't think we are in a position to promote a big push type of approach. Rather, careful management of economy is needed. But at the same time, in order to promote and continue Asian growth and poverty reduction trend, it's also critical to continue right public high quality and high return public investment in infrastructure, because infrastructure is one of the binding constraints for major economies in Asia.
Mr. Sawada, the ADB cut its growth projection for Indonesia,
Yes.
Thailand, the Philippines, emerging markets in this part of the world, which have been susceptible to the movements and the weakness in the yuan. With trade negotiations expected to persist and yuan depreciation expected to persist as well, are these economies vulnerable?
I don't think it's necessarily vulnerable, because slowing down of this economy you mentioned, Thailand and Southeast Asia, Indonesia and other Asian economies, are driven by mainly overall global economic slowdown, and also a cycle of electronics, especially a semiconductor production cycle. So I don't think exchange rate play a major role in this negative tilted downward trend. But having said this, Chinese yuan and as well as other Asian economic currency, that has been determined by basically economic fundamentals. So, and I think although short-term turbulence or short-term fluctuation of exchange rate, each authority play a role to soften a little bit, but basically exchange rate should be and have been and will be determined by economic fundamentals. So I think so far Asian currency has been really market-driven. Determination is market-driven, and rather slowing down has been driven by more structural trend and structural environment of these Asian economies.